Hey guys, Mike here. So, oh boy, what a nutty day in the market. You want to talk about volatile? I mean, we shot up, what, like 0.65% on the Qs coming out, then like around 10 o'clock hits, complete reversal. We go down almost like 0.75 on the Qs. Then, boom, back up to 0.75 on the Qs, and I'm recording this like just a few minutes before close, and here we are going back red in the Qs once again. I mean, wow, what a day. Let's just say that. And I'll show you what caused a reversal this morning and what I believe caused somewhat of a reversal in the afternoon. And again, we'll get into all that stuff. And I'm going to talk to you about, watch out because today's the 27th. After this, we have 2 more trading days in September and this quarter, okay? And I'm going to show you why that is very important. So let's watch and see if we get a little bit of trickery in the market here and why that's so important. Now, again, some stuff came out there which I'll show you. And, I think one thing, if you take a poll, most people would say they are really surprised the economy has held up as well as it has. But the question is, going forward, what do we got to look forward to, right? And you had Fitch come out today and say there are multiple headwinds going into next year, which will absolutely slow the U.S. consumer, which will slow the economy. And when you look at this list, I think we can all agree, right? I mean, labor market cooling, we see it. Wage growth slowing, excessive savings are going down, rate hike effects are kicking in, and then debt service is climbing. I think I've showed you all 4 of those. And what they're expecting is the consumer spending will contract negative 0.8% Q1, and it'll be even worse in Q2. And that's when you have a lot of people who are predicting a recession. Is usually in Q2 right there. And you can see, I mean, what are these rates doing? You keep thinking mortgage rates won't go any higher. They keep going higher once again because you see all these yields climbing. So, of course, boom, mortgage rates hits a new high. What happens to mortgage purchase applications? Again, they keep going down even farther to in the toilet. And, of course, we're not selling our homes. But I always wonder, like, if the mortgage or the real estate industry was normalized right now, I mean, obviously our excess savings would have been gone a long time ago, right? So I still have a theory that's what's just holding everything up right now. But again, one thing they didn't mention was what else is going on. Student loans are kicking in, coming up this next month. There are people who are going to start to pay them. What else seeing? I told you the Case-Shiller index, when it comes to home prices, they went up again because if you have less supply, that drives prices up. More supply drives prices down. And so that's continued to happen. And also we talked about the durable goods, right? New orders. You can see it was slightly positive, as you can see right there. And you compare that to obviously the month before, and it was an absolute hot mess, which that got revised down even further. And when you look at down at the bottom there, U.S. durable good new orders total X transportation month over month. You want to talk about a slowdown? I mean, just look to the right. We'll say from March till now. And then look before that, right? So 2020, 21. I mean, huge difference. And so we'll have to see if that continues to get any better or not. Now, again, this is another form of liquidity holding us up, right? And it was when they passed that infrastructure bill. Look at total construction spending, manufacturing in the United States. That looks like a meme stock chart. Just look at how much money they're putting in the economy, and those are good paying jobs. Construction jobs are good paying jobs. And so, it's starting to flatten out at the top finally, but this was just another form of stimulus to hold this economy up. And why is that important? And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. Because like I always said, as long as we're keeping people employed, it is what it is, and liquidity is king. And there are many different forms of liquidity, and that just happens to be one of them that the government, with all those deficits they keep running, that's just money they keep flooding the economy with, right? The Fed's doing what they're doing with that form of liquidity, loaning to banks while they're giving those bonds that are so underwater, it's unbelievable. And so, it's just something else to keep an eye on. We'll see. I don't see it going down anytime soon because that infrastructure bill has a lot of money in it, right? To keep going over, and it'll take a few years to actually get all of it out into the economy. But that's one of the few bills. I support infrastructure bills because we're building other countries' infrastructure. Why not build our own, for God's sakes? You know what I'm saying? So I'll take that one. And again, construction jobs, they're good paying jobs, man. So, congratulations to those who are, getting money from that. Now, the big thing to look at here, right? We're ramping up in the fourth quarter, fixing to end the third quarter, fixing to end the first 3 quarters of the year. And so the fourth quarter is the most important. Again, I don't know if I did one for here, but I know I did a members video on it, detailing it. But here's one thing to keep in mind, right? Don't bet against the fourth quarter, as it says, and it says, pay attention, S&P 500 performance went up year to date between 10 to 20% at the end of September, right? Remember, 10 to 20% at the end of September. So we're going to scroll down to what the years that matter, which is the 21st century. And when you look here, you can see that right there is where they ended in September. Next column's in October, right? So, pretty good. But then the fourth quarter is the big one, right? Over here you can see since 2003, you've only had one negative fourth quarter. All the rest of them, it looks like it averages out to be about 5.5%, somewhere in there, or 5.1, excuse me. And so, the important part is I want you to look. We bounced today, right, at a certain time. And we're like, wait a minute, what's going on? And right there you see this bounce. Now we got below that trend line, which has been set there since October. But also understanding this is a big rally up. I mean, big rally up right here. Almost a full percent in a matter of like half an hour, okay? And the question is, like, that's kind of weird. Like, why in the world did it rally like that? One thing to keep in mind, we're going to go year to date here. Understand, this is key, that 10 to 20%. If you look, we'll go from January 3rd. We were up over 20% right here, as you can see. As we've done this sell-off, all of a sudden today, where do we get to? 10.8%. What happens if we fall below 10% the next 2.5 days? Well, that chart goes out the window, right? So now all of a sudden you're like, woof, is it going to let us fall or not? I mean, was the bounce coincidental? That's what we're going to find out. If there's going to be a lot of shenanigans to hold us up for the next 2 days or not. And they can keep us flat, and we still pay below that 10%. Now, when it comes to looking at the last 4 Septembers, you can see they're horrible. 2020 is bad, 2021 is bad, 2022 is another bad one, and then you go to 2023 where we're at now. Yep, not any better, right? So remember, going forward, I mean, like to talk about on this channel, things you can use for the rest of your life. September normally sucks. Put it in your phone, mark it on your calendars, teach your kids that stuff, okay? But the fourth quarter, 2020, looks sweet, doesn't it? 2021, yep, even up. Look at that right there. Double digits, okay? You go into 2022 where we're in the middle of a crash. Shockingly, we bottom in the fourth quarter. And even with a terrible, we didn't even get the Christmas rally. That's why it sold off. You still end up 7% up. It was almost 13 before we sold off right after Christmas, right? Then you look at this one. This tells you again, this is 1985. You can see the first, second, third quarter, right? And the third quarter is the worst, for those who don't know. Now look at the fourth quarter. Like, that's just the way it is. You have the most holidays. It has a lot to do with OPEX is on this, the flows coming in, so all kinds of stuff going in here. I still say just bet on greed, because they want their year-end bonuses and stuff. Because that's all that matters to them is their money, right? I'm talking about hedge funds and stuff, so who can blame them? And so again, it's historical data, but you see more importantly in the 21st century, even from 2020 to now. Again, does that mean it's got to happen now because we got a lot of stuff going on we didn't have before? Sure, but in the 2020, we shut down the world. Still had a positive fourth quarter somehow, right? I mean, if that doesn't tell you the market wants to go up, I don't know what else says it. I mean, matter of fact, go ahead and I'm gonna put that in my son's notes to go back and look at 2020. Tell all your kids do that when they get older. Look at 2020 and say we shut down the world, not one country. And look at what happened right here. The market found a way to go up. It tried to find a way. What happened in October? What did they do? Bought 10, basically 7 stocks, but we'll say 10 to run the market up while all the other stocks are basically either flat or down for the year. I'm talking about thousands of stocks down. They find a way to do it, right? It's amazing, but it's just something, it's hard to wrap our brains around, but that's the way it is, all right? Now, what caused the market to turn over this morning? First of all, let me just say, because I apologize for not telling you this before. I thought I did and I didn't. But remember, you had this golden cross on the dollar about 6 days ago. Okay, that's actually a positive thing. If you look, when you have these golden crosses, that's when the 50 crosses the 200. You can see anytime it happens, you usually get a nice run up, okay? And so just keep that in mind. That is a bullish thing for the dollar, like it needs anything else for it to be bullish, right? And there's all kinds of things that obviously will affect the dollar and stuff. But what happened, more importantly this morning, was it had a nice run up while at the same time the 10-year treasury for a second looked like a freaking meme stock. Look right there. I mean, that thing started just running up like crazy, scaring the heck out of the market. So, of course, the market sold down with a quickness. And when you pull out on this thing, you keep thinking to yourself, like, at some point in time, when will this be overextended? That's really the thing. It's no different when people keep thinking, when is TLT going to bottom out, right? Well, obviously, this thing has to stop this run up after it's broken out. When will that be? It's a very good question. Another thing to keep track of on this one is that I know I was reading it today that Japan is like their currency is at that point where it was the last time very recently where the government stepped in with intervention. And of course, the rumor is, I can't prove it, that again, they're dumping treasuries and things like that. And so doing all kinds of stuff, trying to do this currency battle. So, because the dollar is wreaking havoc all over the world right now. So just kind of keep that in mind. Now, Apple, this is a big one. You see this trend line right here? That's the bottom of the dot-com bubble. That's the bottom of the 2018 crash. That's the bottom of the COVID crash. And that's the bottom of the 2022 crash. And you know what? It's getting right there. Once again, there's that line right there. And so it's not very far off from this. So keep that in mind. It started to fill that gap now. So we're going into that gap today. So as I was talking to members about this and stuff, you know, you start pulling up moving averages, everything else, look for confluence on this. You know, right there would be a beautiful round like 165, 166 area where you have the 200 moving average, the bottom of the gap fill, you got that trend line, you got support, all kinds of stuff. Now, will it make it there? We'll have to find out. But that would be a beautiful spot for a bounce for sure. And so, you know, let me know what you think in the comments and stuff. But that is a lot of confluence. And usually when you have a lot of confluence, it's either going to bounce right before it. But again, it would be a lot of support at that area. If it breaks that, we're going into the like 155, 156 area, most likely for sure. Tesla, this one right here starts selling down. I thought for sure the way it was going and the whole market in general, we were going to hit that trend line today. We do got the support, which we put in the other day, around 234.50 right there. And so it got a nice balance there for it. So let's see if we continue down, or maybe this is going to be the final bounce when we start moving up. Depends on what the market wants to do here, obviously. But, you know, we're right there. And again, it's not always going to hit a trend line. That's for sure. But one thing we might be seeing, you never know here, is you got lower lows going right here on the hourly. On the RSI, though, you actually have some kind of bullish divergence and stuff. So we'll see if that plays out or not. And maybe this is just a short-term low for it or not. Now, Meta, you know, as I told the members at 1 o'clock, they're supposed to have this thing about AI, and maybe it'll be a, you know, pop or whatever. Or maybe it'll be the sell the news event. Ended up being a sell the news event, but boy, it recovered when the market recovered. I mean, look at these two candles right here on the hourly. I mean, huge drop down at 130, as you can see. That right there is a 3.5% drop very quickly in an hour. And then look at the recovery, though. I mean, it's like a 6% recovery, I believe, right there. And so that's an amazing recovery up. You got to add the bottom of that wick as well. But I told you, I said, when this thing finally breaks this, you know, symmetrical triangle here, I said, it's going to be a move either way. And the move was down at first. But you can see even buyers and sellers don't know what to do on the RSI, right? When it comes to momentum, direction, which way is this thing going? And so, you know, this will be an interesting one. A lot of people are picking this one to actually sell down. And so we'll see if they, you know, are right or not. Now, Palantir had this nice 5% pop out of the gate, sold some of it off. But what happened was, just to let you know, it was a news event. They got awarded a $250 million, I believe it was an Army contract on this one. And so we'll see if this momentum continues or just a one-day, you know, pop in it because of the news. Again, the 100 moving average and that trend line right there will obviously be resistance going forward if it does move up. So let's watch that and see how it plays out. Now, as far as earnings, the only thing I'm seeing, I want to see CarMax for used cars and see what they're seeing in retail out there. And then Nike, which has just been hammered, beat down, mainly because of China weakness and things like that and China news. But again, this is another one a lot of people keep trying to dollar cost average in, and it just keeps going down even farther. Now, tomorrow, a lot of economic news coming out. You're going to have continuous jobless claims, core PCE, GDP growth rate, which they're expecting it to increase. So initial jobless claims, PCE prices quarter over quarter, and then pending home sales, and then you'll have Kansas Fed composite index as well as manufacturing. And so a lot of news that can absolutely turn this market one way or the other, but it's going to be interesting to see how the market handles the next 2 days, knowing it wants to end up over 10% on the SPY for any of that historical data to play out going into fourth quarter, okay? So, you know, I expect to see a lot of manipulation, but again, right now the bears are in charge, right? But we're sitting on major trend lines and things of this nature I just showed you. And so let's see, because it's the perfect time to see some kind of bounce. But I'll be stunned if they allow the S&P to at least drop below 10% on the year going into this fourth quarter. So you can see a pop up, and then the first maybe week, 10 days in November, I drop back down, set a new low, and then move from there. But that's what I'm looking at least. So hopefully you got some out of it. Let me know in the comments what you think is going to happen over the next 2 days. And so please hit that like and subscribe button. I always appreciate you guys who watch it. Please share the video. Feel free to jump over the memberships right down there, less than a McDonald's combo, and you get a 7-day free trial. So anyway, hope you guys have a great night, and I will see you tomorrow.